This week at the zoo, the Nasdaq surged to new all-time highs amidst nationwide riots as the economic data showed surprising strength. Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment in which we discuss the week's market news and look ahead to the coming week. I'm Christopher Smith.
And I'm Robert Coburn. And this week, we saw the market get off to a slow but positive start Monday, despite the outbreak of nationwide riots over the police killing of a black man named George Floyd. Over the weekend, we also got news that state and local governments are laying off employees and that China has halted its pork and soybean purchases under the Phase 1 Trade 1 deal. As far as I can tell, the trade deal is now dead. Also, the Atlanta Fed dramatically reduced its second quarter GDP forecast to more than negative 50%, which is huge. UK banks warned of high default rates, and manufacturing data for May came in a little weaker than expected.
Yeah, so there was lots of bad news on Monday, but the good news on Monday was that the home construction data for April came in way better than expected at minus 3% rather than the minus 7% that analysts had forecast. So much better there. Also, airlines indicated that they see demand returning to the travel sector, and airline stocks rose nearly 4%, and cruise lines saw a gain of about 7% on that news. Zoom also surpassed the $200 mark for the first time, something that Robert predicted would happen back when they surpassed the $100 mark. So good call, Robert. And semiconductor stocks had a surprisingly weak Monday, despite news over the weekend that the semiconductor companies are lobbying Congress for fiscal stimulus for their sector to move supply chains out of China and into the United States. But they did post strong gains the rest of the week, so the reaction to that may just have been a little bit delayed.
And Tuesday, the market started gaining speed. Despite a reduced 10-year forecast from the Congressional Budget Office, the CBO forecasts that coronavirus will cost the economy nearly $8 trillion over the next 10 years, and that it may take a full decade to replace all the jobs we lost. Motor vehicle sales for May slightly beat expectations, which was great for automaker stocks this week. In earnings, Zoom beat analysts' earnings forecast by more than 100% and revenue forecast by more than 50%. The index has more than doubled Monday's gains, but the Nasdaq inched up more slowly than the S&P 500 as it approached its all-time high from February, and investors continued to rotate into travel stocks.
Yeah, and Wednesday the S&P 500 accelerated even further as the Jets Airlines ETF posted a huge 7+% gain. TSA checkpoints are seeing a 3.5 times as high throughput than in the worst week of April. Although if you look at the data provided by Statista, which we will link underneath the YouTube video, we're still not anywhere near the numbers back in early March. The thing is, if you see a 90% drop in throughput, you have to get 1,000% gain from there just to get back to where you started. So 3.5 times is not enough to get us anywhere near back, normal traffic levels. But we do see growth in the right direction, and the stock prices are reflecting that. The macroeconomic data on Wednesday was also very positive for every sector except for manufacturing. Factory orders for April came in 1% weaker than expected, but the May ISM and PMI data for the non-manufacturing and services sectors slightly beat expectations. And the big one was the ADP payroll report for May, which showed 6 million more jobs in May than analysts had forecast. So if all of that sounded like a lot of weird acronyms, don't worry too much about it. Just know the non-manufacturing sectors are doing pretty well, whereas manufacturing is not doing well. And the big news on Wednesday was that jobs number, where we saw 6 million more jobs than analysts had forecast, which is a huge, huge number and shows that the jobs recovery is happening a lot faster than expected.
And Thursday, the stock market rally from the last 2 days took a pause as the Nasdaq and S&P 500 both reached critical resistance levels, with the Nasdaq testing now new all-time highs. The Dow still ended the day higher, with the S&P 500 and the Nasdaq only falling slightly. Airline stocks continued to outperform as American Airlines announced that it will boost its flight schedule in July. American gained 43%, Delta 13%, and United 16%. Also, the Russian energy minister predicted that oil prices will shoot up next month as the world faces shortages due to production cuts. Oil companies posted big gains Thursday. There was also good news for retail as JCPenney got approval for its bankruptcy settlement, and American Eagle announced strong sales as it reopened brick and mortar stores. In economic data, jobless claims and the trade deficit came in slightly worse than expected, but nothing to get excited about. A much bigger deal was that Europe passed a new stimulus bill, and Mitch McConnell announced that the U.S. won't consider new stimulus until July.
Yeah, and then Friday, the stock indexes surged over 2%, with the Nasdaq hitting a new all-time high on the news that a record 2.5 million jobs were added by U.S. employers in May, according to the Labor Department report for the month. Economists were expecting the unemployment rate to be 18% in May, but instead it was 13%, which is a huge, huge, huge beat on jobs numbers. So that was a really, really big piece of news that suggests that the jobs environment is improving way faster than anyone expected. There was also good vaccine news on Friday, as AstraZeneca said that it isn't going to wait for clinical trial results before beginning to manufacture its COVID 19 vaccine. If the vaccine is successful in trials in August, then it will already have hundreds of millions of doses ready to go to market in Europe in September and in the US in October. Bill and Melinda Gates are pouring $750 million into that project to make sure that those vaccine doses are ready to go if the clinical trials are successful. There's still only about a 50% chance that this vaccine actually succeeds in clinical trials. So that's, not a guaranteed thing, but we do have sort of a 50-50 shot at having a vaccine ready to go to market by October, which is a huge deal. A lot of the science people have been saying that we wouldn't have a vaccine for possibly multiple years. So I've never seen science move this fast, and it's really, really encouraging sign that we might have a light at the end of this tunnel. Also on Friday, Novavax signed a contract with the DoD to receive $60 million from the DoD to manufacture 10 million doses of its vaccine for delivery later this year. So there is also a plan B if that Oxford AstraZeneca vaccine doesn't work out. So possibly some good news on the vaccine front. Although I should note that they discovered that the coronavirus vaccine probably won't be any more effective than the flu vaccine in terms of only providing protection for a year. So you may not get lifelong immunity from these vaccines. You're probably only going to get like a year's worth of immunity. So you'd have to go back and get a booster every year.
So, Chris, it sure looks like the economy is a lot stronger than anyone expected, and the recovery is coming pretty fast.
Yeah, it really does. I still see some risks out there for a few sectors, especially for banks, real estate, and the mortgage market. So on Thursday, we saw a big spike of defaults in the commercial mortgage market. And bankruptcy analysts are expecting residential mortgage default rates to rise as well in a few months once the sort of the stimulus checks wear off. And Friday's big surge in bond yields caused the mortgage rates to rise pretty sharply, which will hurt housing demand moving forward. So we've had pretty strong like new home sales because mortgage rates have been so low. Everybody's like, now's the time to buy. But we may see that slack and fall off a bit as mortgage rates move up. So personally, I'd stay out of that real estate market right now. The bank stocks right now, I think they're going to continue to see weakness moving forward. And we're also seeing continued weakness for U.S. manufacturing. That sector could recover, though, if the next stimulus bill includes provisions to move supply chains from China to the United States. So it might be time to make a speculative play on manufacturing in sort of early July as we start looking at the next stimulus package. But definitely the market is strengthening fast overall. I just stay away from those sectors where there are still risks and look to some of the ones that have been outperforming and expect those ones to continue to outperform. The Fed also has expanded its lending to state and local governments this week. We saw a big expansion of the municipal bond program, and that should mitigate some of the risks that I've been worried about of government layoffs and also tax hikes. If local, state and local governments were to raise taxes in order to cover budget shortfalls, we could definitely see some weakening of the economy over the next few years. But the fact that the Fed is lending a lot of money to state and local governments means that some of that risk is reduced. So I do think that we're seeing a much improved economic outlook moving forward. Robert, what were you watching this week? What stocks were you watching?
So this week I was watching Take Two Interactive. However, this week it fell a few points this week, and nothing major was announced by the publisher. Many companies, including gaming companies such as Epic Games and Activision Blizzard, postponed the release of new content and didn't release any future plans in support of the protests going on around the globe. What about you, Chris? What were you watching this week?
Well, I watched silver, applied materials, and Intel. Last week, I mentioned that I thought silver would dip this week as the dollar strengthened, and it did that. And I planned to buy it on the dip, but ultimately, I decided not to do that. The economy is looking a lot stronger, so I think that safe haven demand for precious metals is going to start to go away. And I had been watching what looked like some inflation happening in the dollar, but I did a little more research this week, and when you adjust for trade, actually, the dollar looks pretty strong. It still looks like we're in a deflationary phase. So I don't think there's a lot of reason to hedge with precious metals right now. I didn't end up buying silver after all. Intel and Applied Materials, though, had a really good week. Applied Materials gained over 7%. And on Friday, I also bought some calls on the Nasdaq and S&P 500 when I saw that amazing, amazing jobs report. And within just a couple hours, I doubled my money. So that was pretty nice. Let's talk stocks we're watching next week. Robert, what are you watching?
So this coming week, I'll be watching transportation stocks. With airlines booming, as long as no major spikes in COVID occur, they should continue to rise, but will probably come down slightly this coming week with a hangover over that 44-day rally bender of just craziness. I also will still be watching Bitcoin. It moved slightly over 10,000 to start this last week and has fallen back down, but not down to its usual sub 9,000 levels. So we may see another go above 10,000 in the coming weeks. I've seen a lot of articles where analysts say that the post-halving failed to occur. However, if you look at the previous halvings, you know that it takes up to a year for it to occur. So some of those articles I feel are just sensationalizing and trying to hype up Bitcoin's failure.
Yeah, I had been a little surprised actually at the strength of Bitcoin post halving, but we had a discussion after the podcast last week, Robert, where you informed me that this was not the last halving. There's another halving coming. And so I think that we may have misled some of our listeners on that and should probably correct ourselves on that. There is one more halving coming, folks. So there are still some upside catalysts in the pipe for Bitcoin in the future, I think. Um, so I was expecting that we'd see a big sell off because there's no more halvings, but that's why it hasn't happened. Folks, I do want to throw out one little shout out here. There's an agency called the ECRI. Lots of analyst firms have been continuing to reduce their economic forecasts ahead of this big jobs report. And it turned out that actually the economy is improving a lot faster than expected. And one analyst firm that got it right was the ECRI. The ECRI has successfully forecasted the last 3 recessions. So I'm going to be watching their data really closely here on out. And they provide their forecast for free on their website. So, go Google the ECRI and check out their analyst forecast. I think that it's pretty useful, kind of 6-month leading read on the market. Folks, if you learned anything useful on the podcast this week, please give us a like, share, or comment on YouTube. You can also follow us on Twitter. I post the economic news throughout the week on Twitter. We also have a Facebook page. You can like us on Facebook and get our videos as they are posted on Facebook. And if you prefer an audio medium over the video medium, you can also follow us on Podbean and iTunes. Please share the podcast with your friends. We don't do any marketing, so it's entirely word of mouth, and that helps us keep the podcast going. You can also, underneath the YouTube video, there's a referral link to Webull, and you can open a Webull account and deposit $100, and you'll get a couple free stocks. We'll get a couple free stocks, and that helps support the podcast as well. We really, really appreciate your listener support, and we will see you back at the zoo next week.
See ya.